It is Wednesday, June 7th, 2017. It's 9:06 in Hawaii, 3:06 in New York. My apologies for the background noise. Big time jackhammer action here in front of my building. Account value is 96K and a little something. I'm still long JDAS, the leveraged inverse ETF on junior gold miners. Here on the left we have gold futures, and on the right GDXJ junior gold miners. Yesterday we saw that run in gold and the massive run in GDXJ, and it stalled right where it is supposed to stall at 34. Since then, gold is rolling over, but GDXJ is not showing any signs of weakness right now. It's actually relative strength. While gold is down $10, we are losing just a little more than 1% in GDXJ. That being said, that 34 level here is significant because it would be a sea change. If we go north of 34, we will probably go to 36, 38. Who knows where we're going to go? But I think we would need the help of gold to at least stabilize. And this can turn out to be a shakeout. But it's too, I mean, this move yesterday, but it's too early to tell. And because gold is rolling over, I will manage this position the way I would manage it if I were trading just by myself and nobody was watching. And that means I will hold it until I either get stopped out above 34.20, that is when I abandon ship, or if GDXJ turns around, tests 32, and then I have to see how it reacts if I think 30 is back in the cards, or even 28. Once I am out of this trade, I will approach it a little differently, because I know my risk tolerance is higher than normal, and I actually find it boring to just own stocks. Even if I ship the entire account into one particular stock, I find it boring. There's just not much action. So if I had to choose right now, I would put everything in Tesla, and I'm pretty sure I would make money by the end of the year. But I'm also pretty sure I'm not going to make 50% or 100% on it, because that is what I'm aiming for, or I would be disappointed. That would be a wasted year in my book. So I need more oomph to it. I need more action. I need higher returns, and with that, I'm also willing to take a higher risk. But I realize that these swings are not easy for, let's say, normal people to deal with. So going forward, I will try to limit the swings that we are having by reducing the holding period for leveraged ETFs, especially when we are trading gold miners, because JNUC and JDAS are the most volatile vehicles out there. Maybe UVXY you can also throw in there, because that thing can also make massive moves. So for those vehicles, I want to shorten the duration that we get in one day, we get out the next day. If there is no good risk reward in any leveraged ETF, and there is not that many that make sense right now, because the market is just not volatile enough, so we don't get any dips. And I like to buy dips and sell rips, and since we are just grinding higher, it's very difficult to find ETFs that do make sense. And if I have to go and buy individual stocks, which are definitely less volatile than leveraged ETFs on miners, and then the duration is not that big of a deal, because the swings won't be that big of a deal. So, but for the time being, I want to manage this trade the way I would usually manage it. And right now, I do not see a reason for me personally to abandon ship, because the trade to begin with is not based on technicals. It is based on fundamentals. The economy is accelerating, inflation is rolling over, it is decelerating, and that is fundamentally a bad environment for gold. The problem is gold miners have already been underperforming for so long. Maybe it has been overdone, and that is what miners are trying to tell me. I'm not sure. It's still too early for me to say, and what I want to see is how do miners react when bond yields actually go higher again. Right now the 10-year is at what, 218-ish or something like that. It's still very close to the lows of the year. And once they move higher, and I think they will, it's just a matter of time, that's when gold really gets tested, because so far with yields coming down all year, there was no real headwind for gold. I think that will change the latter part of the year when it is evident that the economy is accelerating. So far, yields are not reflecting that, and that is why gold is behaving so well. And let's take a quick look at Tesla here in closing. It is just on fire. The way it is acting is just beautiful. Every dip is being bought right away, and it continues to march higher. The 350 level didn't even cause any hesitation or any sellers to come in. This thing wants to go higher, and I think 400 will happen before the end of the year. And who knows how high it can actually go? There is no real metric that we can put on to give a proper valuation on the potential what Elon can do while he changes manufacturing, while he changes the way cars are being built, how autonomous driving works, how we think about energy with the solar panels. I think there is so many catalysts out there that will drive Tesla higher over time when people realize that Elon is no regular person. He's no regular CEO. He clearly is changing the way we think about energy and then manufacturing to begin with. I see a path for it to be, a juggernaut. Like a massive company. We cannot look at Tesla and think it is a car company. It ain't. So I'm still the biggest fan. I'm also liking Square. I've liked Square for quite some time, although I'm not a big fan of the Jack. But I love their business model, what they are doing to small merchants. I love their, what is it called, Square Capital, their lending arm. I think it's beautiful. Okay, let me bring up the chart here real quick. It's just been on fire this year. I think it's already up like 70% or something like that. And I think it can go a lot higher. I actually think it could be taken out. I think PayPal could be a buyer. Visa, MasterCard, Apple. There's so many potential suitors to it because I love what they do. I love the business model. And I love how it makes the merchants more efficient. I love the lending arm. I love how the customer feels when they see the product, how seamless it works. It's just a beautiful business. And then I'm also liking Chegg a lot. That is a not very well-known company, and maybe I do a video one day explaining a little more in detail why I like it. But this is also on my radar. Love the stock. Okay, but that is it for today. I'll be back tomorrow with another recap.